Good morning, and thanks so much for tuning into the trade setup. I'm Neeraj Shah, and let's take stock of the global situation. It's not as tough as it was looking yesterday. But first, the news flow. US pending home sales surged 8.1%, the most since June 2020. That's one more statistic out there, just pointing towards some upsides there on the economic front. Morgan Stanley sees the first Fed rate cut now straight in March 2024. From 2023, it's gone to March 2024 for a bunch of banks. High fares are here to stay as airlines take advantage of the post-pandemic travel boom, says the CEO, founder of AirAsia. And Elon Musk regains the top spot as the world's richest person as Tesla surged in trade. Now, Tesla not only made Elon Musk the richest person, but it also brought about some bit of spunk in the US market. So if you just see what happened in the US markets yesterday, about a quarter of a percent for the Dow, the S&P 500 a third of a percent, the Nasdaq 0.6%. So there's some bit of gains for sure at the US end of the spectrum. The other statistics will come up on your screen. The dollar index might have come off a little bit. Yes, it has 104.64 because the dollar did show a bit of a retreat yesterday, even during our market hours, I think. S&P VIX is down 3.32, so the volatility in the US markets is not a concern at all. The 10-year yield continues to stay at about 3.93. I reckon the SGX should be flattish to maybe marginally positive, if you will, because that seems to be the nature of the day trade today. Well, flat for now, 17,490. Let's see what happens during the course of the day. Remember the Nifty, viewers. Now let's bring up the trade setup. The Nifty is trading very close to its 200-day moving average of 17,376 or thereabouts. Remember, we've been talking about how 17,350 to 400 is that zone of support. Now, we're very close to that 200-day moving average, and which is why maybe very large naked shorts might not be coming because people will be wary of a bounce back that comes in. Remember, like me, bunch of people have bunch of quant indicators which might be indicating X, Y, or Z. And if those indicators are indicating a possibility of a bounce back, very large short positions might not come in. And I think that's what we've seen. Now let's stick with the plate, never mind. So Nifty is very close to the 200-day moving average of 17,376. Metals continued to sulk yesterday, even as real estate staged. And I think the telling part was that real estate, banking, etc., all of which have been sold down, have come back a little bit. Yesterday, we saw Telecom amongst the large caps, Telecom, ICICI Bank, and select banking stocks seeing a bit of very strong buying interest. Now, can this move up further? That is the key thing. Now, Virat, if we can, I'd like to have that ICICI monthly pick plate first before we move on to the others, if it's possible. Yeah, thank you so much. Now that is State Bank of India, and it just goes in with the point that we are trying to make on the trade setup. That what happened to banks now? Most of the PSU banks are near the major put base, and ICICI Securities says that they expect a bit of a recovery. Now, SBI witnessed aggressive short build-up in the February expiry, which has got rolled into the March series. But stock rebound yesterday after testing its major put base of 520, which is a positive sign according to them. So they believe that if the stock manages to sustain above 520, then we might witness some recovery on the back of short covering. Now, this is true for most of the other banking stocks as well. We saw that happening to ICICI Bank yesterday, SBI yesterday, some of the other PSUs, and if they continue a bit of a bounce, that might augur well for the markets at large as well, even if metals are sulking. So that's the long and short of what's happening around banking and why you should be conscious of the bank Nifty, which actually ended well yesterday, despite the Nifty correcting. And that might well be the trigger for the markets to do well again. So let's see. We spoke yesterday that the indicators are ripe for a bounce back. Maybe we see that today as well. Among stocks to monitor, and Z could be very interesting. Got a slam dunk yesterday, was down and out. Now, NSE said that the surveillance actions against Z have been reverted after NCLAT has stayed the insolvency proceedings. The exclusion of Z from futures and options segment stands withdrawn. The FNO contracts with May 2023 expiry will be made available from Feb 28, which is today. So I suspect there will be a sharp recovery in Z. Let's wait and watch. NHPC, the cabinet has approved a 2,880 megawatt Nepal multipurpose project worth 1,600 crores in Arunachal Pradesh. Now, the figures out here are different. The actual project is worth about $3.5 billion. What has been approved is the initial investment, and therefore this worth 1,600 crores comes in from the press release, I reckon. But the overall project is much, much larger. So you might see this number 1,600 crores here, and you might think that that is wrong. Nothing is wrong. The actual project size is $3.65 billion. What's been approved currently is about the sum of 1,600 odd crores. There is also another sum of 21,000 crores, which is doing the round. So multiple angles to this one. It's a very large project. I think the initial sum approved is 1,600, but a large one at that. Maybe NHPC has a reaction. Wipro is the third one, which a lot of people are saying it's a big development. We, of course, my colleague Hiral will be talking to Mahatesh Sabarant, I believe, at 8:30 today on this. My limited point out here. So they've announced 4 strategic global business lines. And the company said they've restructured business to align better with evolving client needs. This is what the company said, of course. From a business perspective, from a company's internal perspective, this certainly seems to be a big thing. It probably is preparing the company for the future. Does it have a material impact on the stock? Who knows? Morgan Stanley note stays underweight on Wipro, for example, and their note suggests that the plan is to realign the service offerings of Wipro into 4 global business lines, indicating a sharpening of Wipro's focus and a doubling down on its investments or management bandwidth to grow each of them. Now, if they are successful in this, then maybe Wipro has some great key positives coming out of this, but will it necessarily happen? We don't know, and that's why from a stock perspective, it may not really mean too much, but this is my limited understanding based on whatever little I've read thus far. It'll be interesting to log in to Mahantesh's conversation at 8:30 to try and understand that whether this means too much or significant from a stock perspective. I don't think it does, but let's wait and watch. There is a note, since we moved on to broking as well, there's a note that Morgan Stanley's put out on Bajaj Auto, which is interesting, and I'll lay it out here for you. They're saying that Bajaj Auto's March production is likely to be between, as per Economic Times, they're quoting Economic Times saying that March production is likely to be between 250 to 270K versus the 3-month average production of 280K per units. Now, they believe that the dispatches to Nigeria, which forms about 15% of exports for Bajaj Auto and 7% of total volumes, would be very low in February and March because of all the stress around Nigeria. As a result of which, the run rate comes off. Now, they are saying that Bajaj's 3-month average export run rate is close to FY12 levels, from where the risk reward actually is very attractive, according to Morgan Stanley. They believe that they will use the weak February and March data to add on to the stock, which effectively also means that the stock may react a little bit to these data points, if not already. So bear that in mind. MS has a long-term view. If you're a trader, just look at the last 1 month's performance, and if not, then actually what Morgan Stanley is saying that Bajaj Auto might react negatively to weak February and March data. So it's an interesting position, interesting note, and something for a Bajaj Auto trader to take stock of. Lastly, Nomura has come out with a note on green hydrogen. A lot of us are thinking about how to play this theme, if at all we should play this theme. So they are saying that they expect the government green incentives and mandates in FY24. They prefer Reliance and L&T, the major players in the segment. According to them, L&T is put into place technology tie-ups and joint ventures to target the refining segment. And Reliance targets at least 20% Indian market share with a fully integrated plan consisting of establishing gigafactories and securing technology tie-ups on green hydrogen in India. So these are the ones that they should keep in mind, is what these are the ones that they are saying people should keep in mind. So do watch out for this one for sure. I'm trying to think if I've missed something. So one, of course, I think we should watch out for Z because surveillance actions against Z have been reverted. So that is the key thing. Government has roped in IFCI and Ernst & Young to streamline the FAME scheme. Maybe it is positive for IFCI, I don't know. I will watch out for the Adani Group stocks because of the roadshow that is currently on. So do watch out for them. Very difficult to figure out when the bounce back or anything comes in, if at all it comes in. I'm just saying watch out for the group stocks because of the roadshows that are currently on. Yeah, these are the 2 or 3 names that we should be watching out for. So let's wait and watch. Well, that's the long and short of the trade setup. A bunch of interesting conversations lined up. And as we wrap up trade setup today, I urge you to tune in at 10:30 to hear an interesting conversation with market veteran Ramesh Damani. As we wrap up trade setup, here are a slice of what is to be expected in that interview. Of course, thank you so much for tuning into today's trade setup.
You need to be invested in this country. That's the first rule. I think over a 10-year period, okay, the Sensex always delivered positive returns. Okay, it can be very volatile over a quarter, very volatile over a year, very volatile over maybe a couple of years. But if you remain invested in high quality businesses, I don't think there's a 10-year rolling period in which you could have lost money in the Sensex. So the first rule is you remain invested. Now, what do you invest in? That's a more difficult and more challenging question.